This meeting is being recorded.
Hello, friends. Thanks so much for joining us again. We are on episode 3 here. We're going to be talking about what kind of to expect on the loan process and how to get started. And here joining me today is my good friend Brian. He's going to walk you guys through the whole thing. He's been doing this. Brian, how long have you been in the mortgage industry?
26 years now.
26 years, which is incredible because Brian's only 29 years old. So like his whole life he's been doing this. So he's going to walk us through it. He has tons of experience. He's here to answer all of your questions. Of course, after this, I'll be sure and post all of his contact information for you too. So Brian, thank you so much for joining us. Take it away.
Yeah, I appreciate you having me. I'm very excited. I kind of want to demystify the whole application process. I talk to people all the time, and they're always nervous about the financial part of it. Am I going to qualify? Do I make enough money? Is my credit good? It's really not that difficult, the whole process. I think it is important, though, to get approved prior to starting the shopping process, because you could be spending a lot of time and wasting a lot of time and you don't qualify for a mortgage, and then you fall in love with a house. It's very frustrating for everybody involved. So my goal after I have a conversation with somebody is they understand what their options are. They understand the whole mortgage process. There's really just 3 main aspects of a person's situation we're going to look at. Obviously, the first one is going to be credit. Credit, the higher your credit, the more options you have. So credit is not necessarily designed to see if you can charge money on your credit card and pay it right off. What we're doing, the whole application process, is just a risk assessment. Okay, so if we look at someone's credit and they have high credit scores, it's assumed they're a less risk. Not everybody has perfect credit, though. So one of my goals when I'm talking with people is, and I look at their credit, my system will actually tell me what specific actions they can do to increase their credit scores. Maybe it's paying down the credit card that's maxed out, or opening up a new credit card, or I see sometimes people have some extra cash and they just go and pay off a collection account or something. That's not necessarily the best thing to do. What I would do, always talk to a mortgage specialist first and say, here's the money I have. What should I pay off to maximize my credit? All right. So looking at credit is going to be one of the big factors. It gets you better terms, better interest rate, maybe down payment assistance, and different options. It just gives you a lot more flexibility with higher credit.
That's such a good point that you've made too, because I can't tell you how many times that I talk to folks and they're like, yeah, I've been working on my credit for 6 months, 12 months, 18 months, however long. And they're like, oh, it's going to be so good. Then you pull it and you're like,
it went down.
Oh no, like I thought that I was doing the right thing. I was paying off these old medical bills. I was paying off this kind of, and it's like, oh my gosh, that's why, the very first thing, as soon as you have that thought, is to call Brian. Yeah. Let us help you. Because a lot of the things that we know about credit may not necessarily be right. So that's a very good point.
Yeah, some of it's even counterintuitive. You would think paying off a collection account would help your credit, but if that collection account happened 4 years ago and they haven't reported it in the last 4 years, except it shows a balance, and then you go and pay it, well, that's recent activity on a collection account, it's going to hurt your credit. So definitely talk to somebody first.
Yeah, absolutely. And like you said, you have a way to show them what's going to help. It's not going to be like, well, try this and see if this works. Well, we'll try. No, it's okay. This is, you do X, Y, and Z, and this is your predictive score change. So that's awesome. I like that part.
I'm able to actually go into the credit report, and they have a couple of different things that I can do. One of them is a what if scenario. So I can go into their credit and say, what if they paid off this credit card? It'll say it changes your credit score from this to this. What if they open a new credit card? What if they pay off this and that? So it'll tell me every time you do something different, credit scores go up and down. So I can tell them exactly. Sometimes paying a credit card off isn't as good as paying it down to $100, because they want to see that you're going to continue to make payments. That's what credit's designed for. Are you willing to make payments? Not can you pay off your credit? So it's definitely important to talk to somebody. Then the next thing we look at is we have to assess someone's income. And I mean, it's easy if somebody's on a salary. I know what their salary is. It's going to be the same. But if they're paid with tips or overtime or bonuses, or if they have variable hours. There's a lot of different things. So upfront, we'll ask a lot of questions just to find out how long they've been on the job. You don't have to be on the job for 2 years. We do have to have a 2-year history. So you have to have had worked in the past for 2 years. Now, school counts. So if you were in school, that counts as time on the job. So if there's somebody just coming out of college and they got their first job and they're only there 3 months, that's fine, because the school time counts as their 2 years.
Wow, I didn't know that.
So we'll look at pay stubs, W-2 forms. We'll get a verification of employment if there's variable income, if there's overtime. Now, overtime and bonuses and commissions, there's no way to know how much they're going to make in the future, right? How much overtime are you going to work? How much commission is the new car salesman going to make? So the only way really to determine that is to see what they've done in the past. So if you're going to use overtime or commissions or bonuses, or different things like that, we're going to average the last 2 years. So if you've only been on the job for 6 months and you're 100% commission, you can't use the commission income. You can only use the salary portion. So there's a lot of different caveats when it comes to calculating income. Now there's different programs that allow different, what they call debt to income ratios. So your debts, all of your debts, only things that would show up on credit. So they're not going to look at car insurance or cell phone bills or utilities, only things like child support or car payments, credit cards, different things, whatever would show up on credit, that's what's calculated in your debt to income ratio. And different programs allow different debt ratios. Sometimes it's 43%, sometimes it's 57%. So it just depends on the program. So again, we'll ask a lot of questions up front. Fixed income is considered income. So if you have disability, permanent disability, or Social Security, that's income. That, some people say, well, I don't have a job, I don't have any income, I only make $4,000 a month in disability. That should be able to be used unless it's temporary. Right. So every situation is different when it comes to income. Sometimes if you're self-employed, it's a little trickier to calculate if you've got multiple businesses or multiple rental properties. And then the last thing that we're really going to look at is how much skin in the game do you have? So are you putting a big down payment? Are you putting 20% down? Are you putting 3% down? So the more you put down, usually the easier it is to get a loan approved, only because you have more skin in the game. But not everybody has, $20,000 to put down. So if you're a first-time home buyer, which means you have not owned a home in the last 3 years, so you could have sold a house 4 years ago, you're considered a first-time home buyer. If you're a first-time home buyer and you want to do a conventional mortgage, which is just a regular standard mortgage, you can put down as little as 3%. So if you're buying a house for $200,000, you can put down $6,000. But in addition to that, there are closing costs, right? You have to pay transfer taxes to the state of Tennessee. You have to pay your first year's insurance. So I'll go over all these numbers. If you wanted to do an FHA loan, FHA has a little more tolerance of lower credit scores. You can do 3.5% down. When it comes to closing costs, I think people don't realize there's about, I think I added it up one time with my processor here, there's about 18 people involved in a mortgage transaction.
It's a lot. I was actually just talking to somebody about that the other day, about how many hands touch this.
Yeah. I started to make a list and I was like, oh my gosh. I mean, there's underwriters, attorneys, appraisers, inspectors, title search, processors, loan officers, doc prep. I mean, there's just the list goes on and on. The closing costs typically are maybe another 2.5%. So if you're putting down 3%, plan on putting down like 5.5 or 6 with the closing cost. Unless you're going to get
constantly people are saying, what's the estimate on closing costs? And I'm, well, it depends, but I think 2.5%. I think that's a good estimate. There's a lot that goes into it. It depends on the person, depends on the house, depends on the county, depends on all kinds of stuff.
Yeah, and depending on how much they've fallen in love with the house, they'll figure out ways to get it right. It doesn't have to come from a savings account. It can come from your 401k, from a family member, from your church, from your employer. You can get a gift from all these. So there's other ways to do it. I've actually had a customer, they took a collection in the church and he got his closing costs paid for by the people in the church, which was great. And then there's different down payment assistance programs too. So
yeah, you were talking about this the other day. I liked that.
Yeah, there's some great programs out there, and some that a lot of people aren't aware of. And that could probably be a whole nother episode, just down payment assistance programs and what person fits into what type of down payment assistance program.
Right.
So once we figure it all out, we figure out the income. Somebody might qualify for $400,000, but they may not like the payment because the payment's starting to get up there. So we'll figure out between what you qualify for and like what's the cap that you're willing to spend, like kind of your sweet spot where you should start shopping, right? So once we find that sweet spot, then Nikki, they come to you and say, hey, I want to spend between 325 and 360. I don't want to go over 360. And then, once all the preliminary calculations are done and everything, I can give a pre-approval. And what that does, I don't approve a loan. Mortgage people don't approve a loan. An underwriter is the person who actually approves the loan. So my goal is basically structure the loan so it fits all the guidelines so that when we present it to an underwriter after you have a contract, the underwriter says, yeah, we can do this loan, and you get a commitment and approval from the underwriter. I like to do is while you're shopping, and I have the W-2s and the bank statements and the pay stubs, while you're shopping, send it to an underwriter with a to be determined address so that they can then review it and make sure that once you find a house, we can just plug in the address, get an appraisal and title work, and I get a commitment from an underwriter. So I think that's a nice feature that we definitely offer that not everybody will do because they're underwriting a loan and you haven't even found a house yet, right? So you may never find a house and the underwriter just spent all that time, but I think that work up front is prudent to have that taken care of.
I think so too. And it as a listing agent too, it's great to have that commitment up front saying, hey, listen, this is approved. This is good to go. We're good to go.
Yeah, we're not just going based on what Brian thinks. This has gone to an underwriter, and
exactly.
That makes your offer stronger sometimes. If you send without not only a pre-approval, but an underwriting commitment, yeah, that
makes
really,
a big difference.
Yeah. So let's assume they find a house, then they just go into contract. Nikki, again, you go back into work and you go and you negotiate, which you're a rock star negotiator for the customer, and you make sure that they get the best deal. Sometimes depends on the market, not as much happening. Sometimes you can get the seller to pay for closing costs. Sometimes we can build it into the loan. There's different techniques that we can do if somebody is a little short on cash too.
Right. So
if everybody agrees and they accept the offer, now the loan would come back to me, right? So so the first round I asked for a set of documents, pay stubs, W-2s, bank statements, not everything that I'm gonna need. Now, once I get the contract, the customer actually has to apply for the loan on that specific property. So once I plug in the address and the income, it triggers within 3 business days, I have to send disclosures to the customer. So disclosures basically are it's just paperwork that they have to sign that says, I've received a copy of this and I understand my rights as a consumer, right? So they have a right to receive a copy of the appraisal. They have, it's endless, the amount of stuff.
There's a disclosure for everything. My folks, they've worked with me, they already know.
There's one disclosure that you have to sign, and the next disclosure says, I'm acknowledging that I signed that previous page.
Right.
It's so redundant sometimes, but there's a reason for it. At some point, somebody says, I didn't sign that or whatever,
Right.
So once we get all the disclosures back, signed by the borrower, the loan will go into processing. We do processing here right in the office, and Samantha will get the file, she'll review it, and her job is to get it set up so that we can present it to the underwriter. So we're going to send it to the underwriter before the appraisal's done, assuming we hadn't done it while you were pre-approved. it would go to the underwriter at that point after disclosures. But still, even once we get the contract, we're going to send it back to the underwriter and say, all right, review everything. I don't have title in the appraisal, but here's the house, here's everything, just to make sure everything works. I just don't want anything to creep up on us, and then all of a sudden, a week before closing, the underwriter finally sees it and denies the file. That would be
Well, and that's the thing too. I think a lot of folks, I call it kind of the boring period between like the inspection and the appraisal, because it doesn't, on our end, it doesn't seem like there's a whole lot going on. And of course, people are excited and they're antsy, but behind the scenes, this is what's going on. You know, they're making sure that everything's cool. We don't have any surprises, because there's all, that's the thing with real estate, is it's not over till it's over. You know, you gotta make sure all of your ducks are in a row. Nobody's sitting around with their thumb up their rear end, for a lack of better word. So.
So the underwriter is going to give a conditional approval, which means I'll approve it, but there's conditions. So you can't quit your job. You can't go celebrate and buy a new Mercedes, right? Because now your debt ratio is off. You can't switch over to full commission. I would tell people, don't change anything about your financial situation unless you talk to me. Now, sometimes
the biggest one is the appliances or furniture. Oh my gosh.
Oh yeah, there's a 4th of July special.
Yeah, don't do it.
0 interest. Don't do it.
Not until after your loan closes, then party hard, but not until then.
Now, some things come up. I've had people call me, Brian, my wife's car just died. I have to buy a car. We went and looked. The payment's going to be $350. I'll go in, run the scenario, and say, all right, you know what? Your debt ratio will support $350. It's okay to go buy the car. But kudos to them for calling me and checking, because they could call me about anything, right? Even if you're going to, hey, I keep cash under my mattress. I'm going to deposit $5,000 into the bank. No, don't do that. Banks don't like cash, because we got to see where it came from.
Yeah,
so use that to pay bills, not for your down payment.
Right.
But during that interim part, the customer works very closely with processing staff. So he or she will call the customer if they need something. So I gathered paperwork up front. Processor's going to need more paperwork. And then when the underwriter conditions the loan, we're going to need more stuff. Again, doing this 26 years, this process used to be a lot easier 25 years ago. Now, I've had people call up and, do you need a blood sample?
Right, first born child.
Yeah, but people have to understand we're just following the guidelines. It's not like we're making up rules just for that customer. We just have to make sure that it fits all the guidelines. And there's a reason. Once I explain something, and somebody says, well, why are you asking about this $2,000 cash deposit? Well, there's a reason. For large cash deposits need to be sourced and seasoned to make sure it's not coming from any illegal sources or whatever. You know, there's a lot that goes on in the background. So once the loan's finally approved from the underwriter, we get a clear to close. That's what everybody loves to hear, right? Got a clear to close.
Favorite 3 words.
Yep. So throughout the process, they may need to also, before that, do additional signatures. Like whenever I lock the interest rate, I have to send within 3 business days, and they have to acknowledge that the rate is locked. If the loan amount changes, if anything changes on the loan, I need to disclose that, and they need to sign just an estimate, like a loan estimate. Kind of, this is what it will look like pretty much on closing day. Some things may change if the date of the closing changes, the prorated taxes or something like that. But if anything changes, they'll be notified. There's not going to be any surprises. And then whatever cash they need to bring, some things they need to keep in mind is how are they going to get that money to the attorney or at the closing, right? So if they need to bring $10,000, they can't bring cash. They can't bring a personal check. Usually what people do is talk to the title company, and they'll just wire the money over to them. If it's a small amount, maybe they can get a bank check, but their title companies will tell you exactly what to do. And then at the closing, you got to sign stuff all over again. So that's usually wet signatures where they're actually signing. Everything with me is all digital. It's electronic. So they're not going to have to, there's sometimes 1 or 2 things that they need to sign. So it's really not that difficult. I mean, so just to recap, the customer talks to me, right? Or we have a conversation. We talk about what their situation is. I look at their credit. If the credit's good, we move on. If the credit's bad, I make suggestions, and maybe they're buying a house in 60 days or 90 days because we have to fix credit. Right. Then I look at their income, and I put all that information into the system. And the nice thing too is you don't have to just rely on Brian thinks this loan is good. There's what's called an automated underwriting system. So once I get the loan, let's say we're doing an FHA loan. Once I get the loan built in the application, I can electronically send all that information to FHA. It's all secure and protected, but it will come back and tell me, yeah, you know what, Brian, you're right. This customer is eligible and you can approve them if everything is what you say. So now what that means is if the income's less, well, you got to run that automated underwriting to make sure. If the credit score changes, you run the automated underwriting. So getting an automated approval, the underwriter will look at that and say, oh, okay. And we just follow whatever the automated underwriting tells us to do. So we'll look at credit, income, and down payment, what they're going to inject. And then figure it out from there, see if the payment's good for them. It's not that difficult of a process. I don't know why people get so scared about it.
I think it's for me, I bought my first house about, gosh, almost 5 years ago now. I wasn't in real estate yet. I really didn't know what was going on. I think it's the kind of the fear of rejection, but I mean, what you're telling me here and what I've heard, I've worked with a lot of lenders. I was in the finance industry myself before, and I've never heard anybody be told no. It may be a not now, but it's right. Never been a no. And you have to get started. You have to do this first to be, and then at least you know where you are. And then you've got Brian, you've got me, you've got this team of folks that we all want the same thing. We all want you to have a house, obviously, that's our job, and you need somewhere to live. So it makes sense for all of us to work together. But it's that first step, and it's oh gosh, it's just, I think it is a little intimidating up front, but I mean, we're pretty cool people. I might be biased, but I think we're all right. And like, it's nothing that we haven't ever seen before. I guarantee it. Somebody could think that their credit is just in the trash, and it's just not. And of course, like I said, you have a team of folks here to help you, but you just you gotta make that first step, and we'll be there for the rest. So.
I think I was just trying to think of some things that people do is that if I need, say, a copy of their tax returns, I love this. All of a sudden, about an hour later, I get 27 text messages where they took a picture of each page and texted it to me.
Yeah.
That is so hard to convert to a PDF. If people can just scan it and email it, or even better, the application system, they have a link. They can send it right into the application so it doesn't get emailed. You just never know if somebody hacks it email,
There's that part of it too. There's also something really, really cool that I've discovered. So there's a couple of different apps. There's one called Tiny Scanner. There's one called Adobe Scan. And it's literally on your phone. You take a picture of it, or you take a picture that's already on your phone, and it converts it to a PDF. You're exactly right. Makes it so much easier and so much clearer. That way you don't have to go and find a printer and a scanner or whatever and try to get it in that way. It's literally a free app on your phone. It's on Android and iOS both. So it's super easy that way. That's a really good point. And that way, because it's like pulling teeth trying to get the paperwork and stuff. But like you said, it is for a reason. I think that's a lot of the reason we had some trouble in 2008 and prior is because a lot of these guidelines weren't in place then. So we want to prevent that from happening going forward.
I prefer people just send it right into their application instead of emailing it and texting it, because keep everything in one location. I think people don't like everybody getting all up in their business, right? I'm seeing their tax returns, their credit, I'm seeing all their bank statements and everything. I have almost the same requirements that a doctor has. I can't share their information. It just stays between the two of us. I can't even talk to you about it. It's between me and the customer, unless the customer says, full disclosure, you can tell her everything about my situation. I have nobody I need to share it with.
That's a great point. I think that you're right. I think it might be some vulnerability too, because I work with a lot of close friends and family, and I don't know that I've ever shared that I don't get that side of it. I don't know. There's no point really in me knowing. I help you go shopping and negotiate. That's what I do. You take care of all of the financial stuff. I do all the home stuff. I have no need to know any of your financial situation whatsoever. So that's a really good point.
Yeah, I bought a couple houses in the last few months, and I hated it, but I
Yeah.
knew what I needed to send, so I just sent it all. But I just
Yeah.
people getting all up in my business. But you got to do what you got to do.
Yeah, exactly. And that's the thing too. It's like it's a necessary evil. You just gotta do it. Otherwise you'll be stuck in the same situation. And I got a lot of folks right now that are renting. I don't know if you've taken a look at the rental market in a while, but there's nothing really out there. And what's out there is very, very expensive. And
Rentals
I'm
gone up.
afraid. Yeah. I'm getting afraid for some of my folks that don't have another option. So this is, again, I've never had a lender tell anybody no. It may just not be a not now, but the longer you wait to start, the longer you're going to have to wait to get into your house. So,
I did a class not that long ago on why renters rent and don't own. Sometimes it's just because they're only going to be here for 6 months or a year, right? Maybe it's military or something like that. But there's a few misconceptions. People that are renting, why they don't own. They think their credit isn't good enough.
Yeah.
They think they have to have a 700 or 800 credit score. A lot of down payment assistance programs, they need a minimum of 600. To go below 600, you have to really be trying to have bad credit, right? You have to completely be ignoring credit, which happens. But I can tell you what you need to do to fix that.
Exactly. And
it may take a couple of months.
Yeah. And that's the thing. It just takes that initial step for them, that initial phone call, that text, either me, Brian, whoever, just to get started. Because otherwise it's not going to fix itself. It's not going to go away. It's going to be there. The quicker you get started, the quicker you can get into home shopping and then get into your own home. And I think that's so important, especially for, like I've told you, a lot of my sphere is younger folks, just kind of getting started. I know, and I've told the story a million times, but for me personally, whenever I bought my home back in, it was late 2017, early 2018. I just went through a nasty divorce. My credit was absolute garbage. I was in debt up to my eyeballs. And I had to make that phone call, and I was in a house within 3 months. So, in the market, of course, price wise is a little bit different, but the process is exactly the same. It's exactly the same. And it's, I just think the quicker you get in there and get it done, the easier it'll be. I don't think rates are going down. Prices are definitely not going down. I think the sooner the better. And that way you're building some equity, and it just makes sense.
Yeah. I'm always surprised. I hear this about maybe once a month or once every other month. I talk to somebody and ask them, why aren't they buying a house? And they said, well, I don't have 20% to put down. Before, like around the Great Depression area and before, that you had to have at least 20 to 50% down payment until they came out with FHA and then Fannie Mae. But a lot of people have the misconception, especially renters, oh, I don't have money for down payment. That's okay. There's down payment assistance programs. Now, if you're making $250,000 a year and you're probably not going to get down payment assistance. Although I do have a program that don't have any income limits for down payment assistance. So yeah, either credit or my income isn't good. I've only been on the job 2 months. That's okay. You can be on the job 2 months and still get a mortgage, especially if you're on a salary or if you're at an hourly rate. As long as your employer verifies, you're 40 hours a week, you're full time. So before you just kind of throw out the idea, especially if someone's a renter, just let's kick around some options. And maybe they just need to tweak a little bit in their situation so that they would qualify for something in 6 months or a year.
Right. Exactly. And it's always that's what it is. It's just options. It's not anything that, we're not holding your feet to the fire. We're not, there's no obligation here, but just to have an option, I think would take the stress off of a lot of these folks, even if it's not the right time, at least you know, and that way you can get started whenever it is the right time. So
A lot of people are always scared. Oh, I don't want my credit pulled. I mean, we can have a conversation without pulling credit, right?
Right.
I can ask, and of course, everybody says, well, Credit Karma says I have a 780. So, and then I pull it and it's a 620.
Yeah.
It's never accurate, but it's a good indicator if you've had any inquiries or if your balances change or something. But I can figure out if income is good. If not, what needs to change. I can figure out if, down payment assistance or if they have enough down payment. There's one program where you can put 1% down. So if you buy a house for $350,000, as long as you put in $3,500 total, including closing costs, you can do it with 1% down. Yeah, I've got one. I just started that we're closing next month. This month,
oh my gosh.
the end of this month, 1% down payment. They give you your down payment and your closing costs.
Wow.
So don't have enough money. Don't let any of these situations. We can figure it out.
Yeah. So there's no excuse. There's no reason to not get started. But there's something for everybody, and I think that is just really. That makes me happy for so many people that, they think that homeownership is just not an option. And I mean, I've helped a ton of folks, like I said, around, younger folks that are first generation homeowners. And that's incredible. That's so exciting. So
yeah, the last one I closed with that, it took us a year to get her fixing her credit, finding the right house, getting her offer accepted. At the closing, it was about 2 months ago. At the closing, she was crying. She was
I would be too.
Oh my God, she was so excited. It was a long process because she had a lot of different things, but she stuck to it. We all had our eye on the prize, and she did it with, I think she had paid for the appraisal, which was like $500. So she brought like $3,000 to the closing, and she got the keys.
Wow. Well, and here's the thing. A year sounds like a long time, but that year is going to pass regardless, whether you're working on getting there or not. You're going to look back and say, oh my gosh, if I had started a year ago, here I would be.
You're going to be paying rent for the next year.
Exactly. It's the time's going to pass anyway. You might as well. So thank you for sharing that story with us. That's such a great program. And I think that a lot of our folks could really take advantage of that. So.
Yeah.
Well, we are getting about at time. Is there any other closing thoughts, comments, concerns, outbursts that you have for folks?
Be patient.
Yeah.
One thing that we really harp on is not to keep asking. I hate this in the industry. Somebody calls and asks for a W-2, and then another person calls and asks for a W-2, and you're like, I already sent it 3 times, but you're not going to experience that. We have the process in my office here. So my loan officers and myself and processing, everything's right here. My corporate office is right in Huntsville, so it's about maybe 90 minutes away. Our underwriting turn times are super fast. It's about 24 hours for the initial underwrite. Sometimes it's same day. So we put everything together, send it down there. We know within a day, maybe 2 if they're super busy. You have a good team here supporting everybody if they need anything. So I don't even have an office phone. Everybody's phone, it goes right to my cell phone. So if a client calls, if a title company calls, the website, that's my phone number. For processing, it goes right to her cell phone. We don't have voicemails in the office and transferring around. No, you need somebody, they're available 24/7.
That's important too, because same thing. I got my phone all the time. It's always on me. And I'll put both of our contact information here on the video, and then share it in the group as well. That way everybody can, like I said, just even if it's just a passing thought, give one of us a call, and we'll get you started, or at least let you know where you are, and that way you have the options. So again, Brian, thank you so much for being on here with me today. And guys, again, please don't let that fear hold you back. Don't let whatever it is that's holding you back right now. Let's talk about it. See if there's something that we can do for you. Again, this is Brian, and he's been one of my lender partners for a while. Just closed a loan with him, 2 months ago? And I've closed a lot of loans, and that was one of the easiest transactions I've had. So thank you again so much for that. Sure. I'm excited about it. So I will, again, I'll post our information here. If you guys need anything at all, you just let us know. I appreciate you watching. Bye, guys.
Bye.